It's February 3rd, 2025, and time for your Monday market update. Thanks for watching. We have a lot to unpack today. There are headlines going crazy. We're going to talk about that in just a minute. But first, let's take a quick look at your Montgomery County numbers. We have 102 newly listed properties. We have 111 under contract, 81 closed sales, 24 price changes, 3 expired, and 33 currently on the private network. So the headlines are a mass. We've got the headlines for the LA fires and all of the destruction that has happened there and what builders are going to do to try and rebuild or not. It's a mess. We've got 2025 is a renter's market. That is one headline I saw on CNBC. Pending home sales dropped in December 5.5% due to rising interest rates, which is counterintuitive or contradictory to the reports that we were getting in the first couple of weeks of January that we were having the best start to the year that we've ever had. So not sure why those reports are coming out differently. I think it always depends on what news source you're looking at. And of course, tariffs and deportation, two things that will definitely affect our housing market. For today, it looks as though the bond market is responding positively, probably because the stock market is down slightly, and it's not as extreme as I was expecting. Over the weekend, I was thinking, oh man, oh good Lord, what is Monday going to look like? So far, not that terrible. And some people have probably taken their money from the stock market, which is looking a little bit more volatile, putting it into the bond market. So the 10-year treasury is up about 6 points right now, which is a positive piece of information for our mortgage market. Because of course the mortgage rates follow the 10-year treasury, not the prime rate. Even though the Feds met last week and did not lower the prime rate, we should know by now that the prime rate does not directly affect the mortgage rates. So we've got a lot of volatility in our economics right now with tariffs being imposed over the weekend and mass deportations. That will affect our housing market in two different ways. One of which is that most of the lumber in this country comes from Canada. So tariffs on Canada could cause increased prices in our home sales. There was a study done by the National Association of Home Builders that in 2018, Trump's first term tariffs on Canadian lumber added $9,000 to the cost of an average home. So that will negatively impact our affordability if that goes through. I know Trump was on the phone with President of Canada this morning, Trudeau, so hopefully that will be some negotiating. I know that he was also talking to the President of Mexico this morning as well, so hopefully there will be some negotiation going on rather than just a flat impart of the implication of the tariffs. I know I'm very concerned about grocery bills. They're already high enough. And if we have between deportation of labor that picks crops in California and then also import tariffs on Mexico, we could see the cost of groceries go astronomically higher. I don't want to pay $7 for an avocado. I just don't. And I love avocados, so that could be problematic. But all joking aside, there could be some serious implications to this stuff. On the deportation issue, something to consider is that 30% of nationwide construction workers are immigrants. Breaking it down even further, we've got about 61% of plasterers are immigrants. Drywall and ceiling repair, installers are 61% immigrants. Roofers are 52% immigrants. And painters are 51%. So we've got a lot of our labor market tied up in immigrants, and that could be a big problem if we have mass deportations of those people. So we'll see how this all shakes out. As of right now, it's kind of scary. Our market is, holding steady. Next Monday is the day after Super Bowl, so that is traditionally the official start of the spring market. So hopefully all of this tariffs and deportation news is more air than it is actual hard implications on our housing market. I'm hoping and praying that it doesn't end up negatively affecting our housing market, but of course, no one knows what the future holds. We will see. But those are some of the headlines that we're looking at right now and things that, will be affecting us potentially. We did get our January 2025 numbers, so let's look at those. We have prices holding very steady in our area. Our average sales price in Crystal Lake is now $395,000. That is up 4% year over year. In Cary, the average sales price is $380,000. That's up 11% year over year. Algonquin is at $412,000. That's up 8.6% year over year. And Woodstock is at $362,000. That's up 9.8% year over year. So some of those depends on how much how much of your market is new builds. So in Crystal Lake, we only have, really one neighborhood that is new builds, that's sales. That's why our numbers aren't going up as drastically as some of the ones in Algonquin and Cary and Woodstock. They have more new builds going on there, which is great. All areas showed a very slight price decrease from the December numbers. If I looked, so those numbers that I just told you were year over year. So January 2023 or 2024 compared to January 2025, those were the increases. But from December, we saw a slight decrease in the average sales price. And that's largely due to things that go under contract in December that sell in January. Because we've talked about, if you're a home buyer, you might want to get something under contract in December when a lot of people are not looking anymore. And that was true. We had a little bit lower prices in January. Again, that's a result of closed sales that went under contract at the end of last year. The number of homes for sale were increasing in all areas, though it isn't resulting in more inventory, which is flat. So when we have number of homes for sale go up, but we have inventory flat, it means there's also more buyers in the market. So we actually don't have a whole lot more inventory in Crystal Lake. We have 1.5 months inventory. Now, believe it or not, that's actually up 36% year over year. That's because last year we had 1 month's inventory in January. We have 1.2 months inventory in Cary. That's up 33%. Algonquin has 1.4%. That's up 1.4 months. That's up 7%. Woodstock has 1.5 months inventory. That is up 15%. Now, some of those areas, again, have less of an increase, like Algonquin, because there's a lot of new builds going on. So even last year, they had about 1.3 months inventory. So it's not a huge increase because they've been having a lot of building going on. What we are seeing is that there is more existing homes going up for sale. So yes, we have new builds happening, but we are seeing more sellers come to the market. You've got to realize that a lot of people have, I think the numbers on over 65% of homeowners have less than a 4% interest rate, or they own their house outright. So we have a lot of people who have been in their home for 20, 30 years. They don't owe anything on their house. So the mortgage rate isn't going to affect them. So if they're looking to right size, maybe they're going to move to Del Webb, or they're going to move to, one of the other communities, or they're going to move out of state. They already own their house outright. So them having to get a new mortgage is not a factor. So the mortgage rate is not going to affect those people. And that's actually about 35% of our homeowners nationwide. So that's a good thing. The other thing to consider if someone is moving from another part of the country, the Midwest is very, very affordable. There was a study done by Realtor.com recently that ranked the best cities for affordability and for population and amenities and drivability and all of those things. Rockford, Illinois was number 2 out of 500 cities that they looked at. Number 2. That's really good. So the Midwest is a great place to invest your money because your money is going to go farther here than it will in other areas of the country. So some people who move back here to be closer to family, because that's the number one reason people move, is to be closer to family. And that's why a lot of people move here, is maybe they were raised here, they moved away, and now they're coming back. And for those people, if they're moving from another area, their home that they're moving from could be very much more expensive than the home that they're going to be buying here. So not everybody is affected by mortgage rates. Most people are, but not everybody. So as it looks right now, we're looking at a really good 2025, barring any drastic impact from the tariffs or the deportations, which very, very realistically could affect us. But let's hope that those are just more negotiating tactics than they are actual implications that are going to negatively affect us. So that's it for today. I will see you next Monday on the official first day of our spring market. Have a great rest of your week.